Hello traders, The title of the video is Toronto. Elliott trader explains his Toronto Composite Index wave analysis. All right, the epic for Toronto Composite Index is TSX, Tango Sierra X-ray. Well, this is the first time that I'm analyzing Toronto Composite Index. In fact, a trader did ask me to record a video about the Toronto Composite Index. And this is exactly what we're doing. It's like that trader was reading my mind. Who gave you that permission to read my mind? In fact, I recorded this video before, but at the time of the rendering for the video, everything has failed. And now I have to record the same video one more time because the first recording has failed. So that trader was reading my mind. Please stop reading my mind. All right, let's get started. All right. So because as you can see on my chart, as I was recording that video, I already mapped out my chart. And this is my first wave, all right? So somewhere in 1982, where you born that time, okay, up to June 1987, we have one impulse wave, followed by this triangle here, all right? And then from there, we have the third wave, followed by the fourth wave. And then we have the fifth wave. Now, as I told you before, 1, 2, 3, 4, 5 on any time frame becomes 1. So you can see the blue number 1, 2, 3, 4, 5 without any area wave violation will become 1. So that is the first wave of a higher degree that is subdivided into 5 blue, okay, if you accept that, minor wave. All right. I like the trading view. I hope I have enough data from 1982. I'm happy with that. I can work with that, so I'm not worried about that. Okay. So after the fifth wave, that is the first wave of a higher degree, we see this pullback here. So trader very often will. So as you pull back here, people will be thinking that, all right, the correction has ended, and probably a new trend will begin. But no, that trend has failed. And what we see now, we have a consolidation in a triangle. So if you are trading, all right, if you are trading this Toronto, all right, Composite Index, just understand that from 1982, all right, up to 2000, September 2000, we have a trending phase. After that trending phase, we have a correction in the shape of a triangle. Now, there are similarities between the Toronto Composite Index and the FTSE 100. All right. So I don't want this video to be too long because I recorded it before. In my mind, I'm a bit lazy to repeat myself again. So I will refer traders back to the video that I titled "A Londoner." Okay, blah, 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 something to do with the FTSE 100, all right? So you may see the similarities between the Toronto Composite Index and the FTSE 100. So that video was a Londoner applies Elliott wave principle to tame FTSE 100 index. All right, so there are similarities between the Toronto Composite and the FTSE 100. Trending fell followed by a correction in a triangle. So you may say to me, this is A, B, C, D, E. You may argue that that is the case. Or, but if you watch the video about the Londoner, okay, blah, 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 about the FTSE 100, you understand that it's too early to say that. But no one can deny that the current market pattern, as we can see here, is a triangle. So people are selling at the top of the triangle here. You see here, they are selling there. All right. And when they sell it here, all right, their ultimate target is this trend line here. All right. The midpoint target is the median line. This is the median line here. All right. This is a consolidation play. So what I say to traders, talking about the 6 biggest trading mistake at dayprotrader.com, check that webpage. There are 6 biggest trading mistakes that traders are making all the time. So you'll be amazed how traders are trading this Toronto Composite Index. They will be doing all kind of things, whether they are day trading, swing trading, but it's just a consolidation play. You want to know where we are, what is going on. In fact, I would like to apologize to trader because otherwise trader could have participated in this January trade here, but that video had failed. I recorded that video, I think on the 4th of January, I recorded that, or not, was it before that? Yes, I think on the 4th of January, I recorded that video. And now you can see that people are buying on the edge of that triangle, see here? So it came down here. Those who sold it at the top here, they were so happy. They are cashing out here. So the bearish traders are becoming bullish traders at this junction here. For a bearish trader to become a bullish trader, they must buy. So in order to close the bearish trade, you must buy back. So the bearish trader becoming the bullish traders here, buy in. And bullish traders who were not selling before were waiting for them to bring it here so they may take it up again. So the game is now inverted. So the target, the midpoint target is this median line here for that move up. So you can see that we are now in January. Right? So I'm recording this video today on the 15th of January 2019, not 2018. 2019, George, wake up. All right, 15th of January 2019. All right, so that monthly candlestick bar went a little bit too far now. So if you were not buying before and you want to buy now, be a little bit careful because they took it too far. What usually takes place is a trader who already bought it here, all right, they are quite happy that they are in nice profit now, and some of them will start closing their position, taking profit at the time when you are trying to join them, and they will take you down. You don't want to do that. So in order to buy, what is trying to get to the midpoint target, will he get there? No one knows. Maybe, maybe not. All right. So if you want to take it there, you want to have a trading setup, a bullish trading setup. You see, when they were taking it down here, you see here, so they were selling it down. The midpoint target is that median line here. Okay. So those who did not sell it at the top here, they were looking for entry point. This is a big issue in the financial market, looking for entry point. And we can use the Elliott principle to look for entry point, to time the market. So those entry points, they were waiting for that bounce up. You see this green candlestick bar here. So they will have to wait until this monthly candlestick bar closes first or brings the price on the edge of the median line, and they sold it there before this one came down to bring it down here. So again here, as they are bringing it up here, they went a little bit too far without you. If you are not already buying, if you did not spot this market pattern, or if you were violating that market pattern, the violation of the market pattern is crazy. When I see that, I cringe, or I don't do that. There are 3 specific market patterns: the rising channel, the declining channel, the triangle, and the horizontal channel. Yeah? So the triangle and the horizontal channel form one market pattern. It's a consolidation. All right. Then we have the trending first. You see, it's about Elliott wave, impulse wave, correction. So when we are talking about market pattern, we are talking about impulse wave in a rising channel, either rising channel or declining channel. Impulse wave, bullish impulse wave, or bearish impulse wave. And then the correction. The correction can be just a pullback or a consolidation in horizontal channel or in a triangle. All right. So this is what's going on here. No one can deny. Are you denying? Are you disagreeing with us? Let us know in the comment section so we can start bashing you. All right. All right. So you see now, so I don't want the video to be too long. So at this point in time, it's just a consolidation play. So as I told you before, you see any triangle, all right, or a consolidation. You can quote me all over on Twitter and say, George said that, and I'm happy with that. Or any triangle, any consolidation. Don't think of continuation. Very often, it's normal to think of continuation because the dominant force is bullish. So bullish traders are controlling the market at this junction now. But now we have what we call a balanced market. In theory, it's equal force between the bullish traders and the bearish traders. But as we are talking about the theory, in reality, there is always a dominant force, even if in theory we are talking about balanced market. So anything is possible until you will know who is the dominant force after a consolidation. The prime might give you the entry point. So if anything is possible, meaning that he be ready to sell if he break below the triangle, break below, retest, turn around. That's what the price doing all the time. Haven't I said that before? And you will say, George, yes, you did 100 times, and I'm still working on it. And I'll say to you, thank you very much. All right. Okay? That's what the price doing all the time. Break below, retest. You see here, people were very patient. Those who were not in retest. Down. That's the bearish trading setup. That's not a signal to sell. That's the bearish trading setup. Now, signal to sell. The setup, the signal, and the entry point. So for us, Elliott wave traders, sometimes we skip the step. So we know about Elliott wave. We talk about, like now, what will happen to the mind of Elliott wave trader who spotted the same thing like myself? So they say first wave, second wave, third wave, fourth wave, fifth wave. And they say, George, this is a triangle. They say, all right, A, B, C, D, all right, E. So they will buy here. Nothing wrong with that. It's a market timing. But before you will buy here, what will you do? This is one step that a lot of Elliott wave traders are not using. Before you buy here, after spotting your A, B, C, D, E, you want to see the trading setup. You may say, Joe, I saw one. That's the A, B, C, D, E. Wait for the compensation line to be broken. Or you want to buy at the value support level. Next step, implement different time frame trading method. So Elliott wave traders that are combining the wave principle trading with the top-down trading method will improve their timing. They can talk about accurate Elliott wave trading. So suppose you forecast that the market will go down, all right? So you talk about accurate Elliott wave forecast. You forecast that it's going to go down, all right? If you just sell it and the price went up, is it accurate Elliott wave forecast? No. But think of it. If you forecast it that it's going to go down, but you are ready to buy and you are ready to sell, and now you use what we call a different time frame trading method. So you forecast it that it's going to go down. Now you are waiting for your bearish trading setup and your bearish trading signal before you will enter the trade. At the time when you are entering the trade, that's accurate Elliott wave forecast. Because what you are expecting is now taking place and you are joining them when it's happening. But somebody else that is just using the Elliott wave theory, not in conjunction with a multiple time frame trading method or a top-down trading method, that person may just go and sell it. And the next thing, the price will say, no, I'm going up instead. What are you going to do about that? That is the question. All right? So reality. So as it comes down here, people will be waiting for. This is a bullish trading setup. So how do you handle that? Did you ask that question? Very simple. It's a good question. Come to the station or the destination or the final stop. All right? You draw a line. So that's what we do. We say to trader, priority to bullish signal above 14156 and priority to bearish signal below it. If you find a resistance, because I'm on a monthly chart, all right? Now we're going to use different time frame trading method. We go to the daily chart, looking for the signal. In fact, a trader did ask me, Joe, show us how you find the signal. Okay, we'll be talking about that when we are doing live recordings. All right, all right. Where is the signal? Okay. So at least the minimum that you will be expecting, either this common second line to be broken, or at least the last one here to be broken. All right. So if you are using the last one here, you see this last one here, that's what the pride did. He breaks above the last one, and then retest it there, and again here. That's well, this is your signal here. Because it's a consolidation. People are waiting on the edge to buy here. And you are not alone. And then from here, is it getting too much for you? At the time when you touch it there, from there, you will switch to the hourly time frame. You say, George, I don't go to the hourly time frame. My face here. Now you are the hourly time frame. See here. So here it is. What do you see on the hourly time frame for swing traders? Hold up, please. So somebody that is swing trading, or I'm still getting used to the trading view, so don't laugh yet. Don't laugh, okay? A lot of traders who are using trading view have more experience than myself in that area. I respect that. That's why I say to traders, it's very stupid to completely ignore the experience of people. Traders show me so much things about the trading view because why? They have been using it for years. That's what we are talking about. When somebody has experience something, don't ignore it. They have been using it before me. So all I did, I say, how do we do this? And I receive a lot of comments. People say to me, Joe, you can do it, Joe, you can do it. And select your favorite whatever, okay, function so you don't go blah, blah, blah. I'm still learning, you see. The experience always counts. So, have you, so on the hourly time frame here, that's your inverted head and shoulder chart pattern in that zone. After, okay, that breaking ball, it tests on the hour, on the daily chart. Here you can enter your trade and look, these traders, you see a gap up on the hourly time frame. And from there, it's just running away. So how long have I been talking to you now? 17 minutes. Let's wrap it up, okay? So there are more that I can say about the Toronto Composite Index. If you go to the yearly chart, this is what we see. On the yearly chart, it's just going boom, 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 up. All right? You see? So from here, it's just going up like this. But there are more to this, and I will come back to it, all right? And I will be also talking about what we call, okay, what am I? Another Elliott wave pattern. I will not mention it now. Okay, I'll be talking about another Elliott wave pattern when the first wave is subdivided into 5 minor waves. Right. So I'll come back to Toronto Composite Index because it's very interesting because we can use the structure of the internal wave of the first wave of a higher degree to focus what is in, all right, what is in store for the Toronto Composite Index. You see that the second wave here, you see that second wave here, all right? It's a triangle right there, all right? It's not by mistake that we are seeing another triangle here. So it's a very good scenario that will help us to record another tutorial to explain to traders why we have a triangle here. The triangle that is happening here is due to this triangle that did happen here, all right? If you go to www.24elliottwaves.com, our brand new, okay, Elliott Wave website, okay, I explain to traders, Elliott Wave traders, how to combine the Elliott Wave principle and fractal pattern. So when we are talking about the structure of the first wave, using the structure of the first wave, or the structure of the first minor wave to focus the whole multi-wave. If you come to our website, check out this video here, you see the video, okay, how to combine fractal and the wave principle. It's a very long video, I think 45 minutes. Sit down, relax, don't let anybody disturb you. Have your, okay, make the video full screen, all right? Have your headphone on and listen to my beautiful accent. All right? So here it is. So this will conclude our discussion today about Toronto Composite in area wave trader. Explains Toronto area wave trader explain his Toronto Composite Index wave analysis. As I said to trader, this is a very interesting scenario, and we'll come back to it in the next few days, or maybe today I'll record another video when I'll go over that. Okay. If this video has opened your area wave trader's eyes, and you truly like it, or you find it useful, please give us your beautiful thumbs up. If you think that George, well, more than 15 minutes, 20 minutes now, George, I'm not impressed, please mark it down. However, if you think that George is an essential tutorial that can help other area wave traders, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. Our YouTube channel is 24 Elliott Waves in plural, digit 2, digit 4, Elliott Wave in plural, right? Subscribe today and be sure to click on the notification bell, as they say, ring the bell and stay put. All right? More amazing tutorials are coming soon. Sometimes I post video first on Facebook. My Facebook page is stochastic-market. So if you want to know where I am, what's going on, you know where to find me. All right? Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about Toronto area wave trader. Explain his Toronto Composite Index wave analysis. The epic for the Toronto Composite Index is Tango Sierra S. Happy trading to you all, and I will speak to you soon. I hope the rendering of this tutorial will not fail, that everything will work well, so I do not have to record the video for the third time, because this is the second time that I'm recording this. So I'm using the Composite, so hopefully everything will work well. Thank you for watching.